All right, let's dive into a question that puzzles a lot of people in the crypto space. Why does it seem like everything, crypto, the US dollar, even gold, all move together in this weird, coordinated dance? It feels like a huge, complicated puzzle, but stick with me, and we're going to put all the pieces together.
You've seen this happen, right? You open up your app to check the markets, and it's a sea of red or a sea of green. It's almost never just one or two coins. It's thousands of different projects with totally different teams and goals, all rising and falling in perfect sync. What is going on there? So, the first part of our investigation is what I like to call the crypto hive mind. It's this strange but very real phenomenon where the entire market seems to think and act like one single organism. Let's take a look. I mean, just look at this chart. This is a snapshot of a totally normal day. You've got Ethereum, the big smart contract platform. You've got Solana, the super fast competitor. And you've got Cardano, which is all about academic, peer-reviewed development. Three completely different approaches, yet their prices are dropping almost identically. This is that hive mind in action. So the most important thing to get right now is that this is not a coincidence. Not at all. It's actually a core feature of how the crypto market works today. And understanding this lockstep movement, well, that's the first key to cracking this whole mystery. Okay, so if everything's moving together, something must be leading the charge. What is it? Well, our first major clue is the king itself, the original cryptocurrency, Bitcoin. Take a look at this number. That's Bitcoin's market cap, its total value. It is just massive. By far the biggest and most dominant player in the game. You've got to think of it like the sun in our solar system. Its sheer size gives it this incredible gravitational pull that tugs on everything else. And now, just to put that into perspective, here is the market cap of every other cryptocurrency combined. This really shows you just how huge Bitcoin is. It's so big that when it moves, it basically dictates the weather for the entire rest of the crypto world. And this brings us to a really key term you hear all the time, altcoin. It's just short for alternative coin, and it means, you guessed it, anything that isn't Bitcoin. And their fate is almost always tied to Bitcoins. When Bitcoin's price goes up, investors feel good, they get confident, and they buy altcoins. When Bitcoin drops, they get scared and sell everything. It's simple. As goes Bitcoin, so goes the market. But wait, that just pushes the question back a step, right? Why does Bitcoin itself move? Well, the story is way bigger than just crypto. Our second clue pulls us into the world of global finance and the most powerful force in it, the US dollar. Now, to get the dollar's role, you first have to understand how the big money players view crypto. To them, it's what's called a risk asset. All that means is that it's seen as having huge potential for rewards, but also, a lot of risk. People pile into risk assets when they're feeling good and optimistic about the economy. And this slide just lays it out perfectly. Think of it like a giant seesaw. When the global economy feels shaky or uncertain, investors run for safety. They buy up the US dollar because it's seen as stable. That's a risk-off environment. And as the dollar gets stronger, money flows out of those risk assets like crypto, pushing prices down. And of course, the opposite is true. When the dollar seems weaker, investors get more adventurous. That's risk on. And they pour money into things like crypto, hoping for bigger returns. This brings us to our final clue, because you can't really talk about investors looking for safety without talking about the classic, the original safe haven asset, gold. So what's a safe haven asset? It's basically where you park your money when you think the world is getting a little rocky. And for literally thousands of years, the ultimate safe haven has been gold. It's the traditional go-to when you're worried about inflation or instability. But over the last few years, a powerful new story has taken hold, and it's captured perfectly in this one phrase. A lot of people now see Bitcoin as the modern digital version of gold. And why is that? Well, because just like gold, its supply is limited, and it exists completely outside of the traditional government-run financial system. This table breaks down the comparison really nicely. You've got gold on one side, ancient, physical, you can hold it. Then you've got Bitcoin, brand new, purely digital, but look at that scarcity row. Both are fundamentally limited. Gold is physically finite, and Bitcoin is programmatically finite. That shared quality means they often attract the very same type of investor, someone looking for an alternative when traditional money feels shaky. Okay, we've got all the clues. We have Bitcoin's massive gravity, we have the dollar seesaw,
And we have gold's role as the classic safe haven. Now it's time to put it all together and finally solve this case.
So here is how it all connects, like a chain reaction. Step 1, some big economic news drops, say new inflation numbers. Step 2, the US dollar reacts to that news. Step 3, based on that, investors all over the world change their appetite for risk. If they're scared, it's risk off, and they sell assets like Bitcoin. If they're feeling optimistic, it's risk on, and they buy in. And finally, because Bitcoin is the sun of the crypto solar system, the entire altcoin market gets pulled right along with it.
And that really brings us to the big takeaway. The next time you see that sea of red or green and wonder why it's all moving together, just remember this: crypto never, ever trades in a bubble. It's a mirror reflecting the hopes and fears of the entire global economy. Thanks for tuning in. All right, let's dive into a question that puzzles a